So what we'll do now is before we take the general pictures, we'd like to take a 2 minute recap of the major insights from each team.
Within the team, we had a broad range of people represented. So we had startups, founders. We also had a funder in the mix. And then we had a couple of regulators as well. Some of the things that we reiterated was one, the fact that public markets, funding from the public market is moving towards the private, and this is now driving driving fintechs. Driving fintechs and startups across the globe. Number one. Number two was that even within the private funding or private funding, there is private, and this was a founder talking about the fact that using the founders startup fund, the founders fund itself goes a long way, and it is drying up very quickly, right? And so because of that, there is need for other people to come in and help. On the flip side, the funder was of the view of the fact that for companies to access capital, there are certain things that you need to have in terms of setup, in terms of the structure, in terms of the focus and the performance metrics that you show, right? So it's a question of managing those two things. One of the things that we also highlighted during the session was the fact that whilst that the investors in public companies or public markets, some of them are actually flowing their monies into private funds. Right, so what you see, some of the investors in public companies, PFAs, asset managers all across the globe are going ahead to fund PE and VC funds that eventually put the money into startups and grow the company. Another thing that we saw was the rise of special purpose action companies that are coming up, raising public funds and then using it to finance private companies. So those were some of the things that we saw in terms of the trend and in terms of how that impacts the fintech space in Nigeria. Thank you very much.
Thank you very much. Next is Ina, please. Thank you.
All right, so we had an interesting conversation within our group. So generally, we spoke about the trends driving the growth of fintechs and the private equity investors that are backing the fintechs. So first, we looked at the trends in terms of funding that has come through from private equity investors, venture capitalist investors, and angel investors. We looked at how it trended over time. And we saw how it exploded between 2019 and 2021, and how 2022 is going to break the record essentially, because what we've seen in half year for investments that have come through is already remarkable. We also looked at what is driving the growth of the fintech space. We spoke about not just the fact that in Nigeria we have a large viable market, but really when you lift the hood, you would find it's really about mobile penetration amongst the unbanked population. And while Nigeria's mobile penetration compared to its other African counterparts appear low, so in the 2019 statistics that we saw had about 100 million out of the 200 million Nigerians having mobile phones. Compared to the other African contemporaries, that penetration seems low. When you look at the absolute number, 50% of Nigeria's population is 100 million. That's more than at least 4 of the African countries combined. So that market really, and the gaps that exist, especially in the financial services space, is really what's creating the opportunities for fintechs to flourish, and by so doing, attracting investments coming through from private equity investors. We finally just talked about what tech startup entrepreneurs should be looking to do to move them into that elite set of startups that are attracting investments coming through into Nigeria and Africa. Thank you.
Thank you very much. And finally, it was okay.
Short but very insightful and interesting session. Part of so two major recurring theme in the group was number one. Do you think that the base of the fintech is wide enough to continue to attract additional funding? Imagine the kind of funding you have on Wall Street. Do you think we have enough base to attract more funding, or do you think we've reached the end? And one of the interesting things that came up was that fintech in Nigeria, as we have it, is beyond credit and payment. So anytime anybody talk about fintech, you're talking about you're providing payment service or you're providing credit service. And there's a need to step back a moment and look at what does an average financial service consumer needs, and then reevaluate the services that you need to build around them beyond just payments and credit. And that way we can increase the base and of the fintech space and continue to attract more funding. And also we're evaluating that average need of a financial consumer would then help us to create more disruptive innovation rather than the incremental innovation that we currently have. And there was a joke we had to say that everybody, literally all the booths outside, are either this pay or that pay or this credit. We need to have more people that goes beyond payment and credit. So the other question that then came up from that is, yes, people are trying to do more disruptive innovation. However, there's a huge upfront capital that goes into building the basic infrastructure that is then needed for this disruption. A very classic example is data collection. Across every sector in Nigeria, we have either you have data non-availability or you have data asymmetry. That whatever source of data you have, you can't rely on it to build a product that can go to market. So individuals are then beginning to spend a lot of money and time on data gathering. So the question is, how do we address question around data gathering, data interpretation, and data distribution? Because these are very key in building the basic infrastructure that then allow us increase the base of the services that are available within the fintech. One last one, not the last one, but at least one of the interesting one that also came up is the role of SDG in what is the role of SDG when it comes to investment in startups, and that a lot of the differently enabled individuals operating within that sector are disadvantaged. So how do we then put in, what kind of structure do we need to put in place to then say that for whatever private equity fund that is coming into the market, X amount must be directed towards developing solutions that comes from these differently enabled individual. Because they have very smart ideas, they have very smart solutions, but the solution literally die with them because they either do not have access to the information of the funders, or even when they are in front of the funders just feel like they might not be able to sustain go to market of the product because they are differently enabled compared to what we have within the landscape. Thank you.